most founders are so busy running their business that they don't know their finances like they should. Things like where you're bleeding cash without knowing it, what it's actually costing you to acquire a client, how to use your finances to make smarter decisions and grow faster, how to save potentially hundreds of thousands of dollars on taxes, which I saw you guys help the company do, which is why I brought on Hunter Scott, founder of Strata Cloud Accountants, to the show to educate all of us on this exact stuff. Now, on the flip side of it is that Hunter's building a business designed to run without him being in the weeds at every point in the day. You know, we're all sort of working towards that. He's got his 5th kid on his way. He's a husband. He's an active father. And he refuses to sacrifice his family time to grow a successful company, which is really a part of the bigger mission that we're all on in regards to this show. So we're going to get into all of this and much more. But first, I just want to say, Hunter, welcome to the Founder Talk podcast. How you feeling?
I'm feeling good. Yeah. Thanks for having me, Alex.
Excited to have you here, man. So let's dive into this because I'm curious because you work with a bunch of founders, entrepreneurs, business owners, whatever you want to call it, on a daily basis. And you're helping them solve these big financial problems that they have with how they're running their business. You're pulling the curtain back. You're seeing what's behind the scenes. Sometimes it's a little scary.
Yeah.
I want to know, what are the top 3 biggest mistakes that business owners are making in regards to their finances?
Yeah. I mean, off the top of my head, the number 1 mistake would be they're just making very little attempt to even track it, of where they are, how they're performing month over month. They maybe have some form of a bookkeeper. Maybe it's, office manager that they've kind of reinvented into a bookkeeper, right? But they're not really seeing like a good look at their business model through the lens of their financials each and every month. So I'd say that's maybe mistake number 1.
And what, we could pause there for a second. What's the importance of knowing that, of being able to do that? Like, what are they missing out on by not, having a better look at that?
Absolutely. What you're missing out on would be, a good understanding of how you're performing, right? So if you're not seeing like a good, I'll get kind of technical, right? Accrual basis financial every single month, right?
Okay.
What you're not seeing is you're not seeing your true performance on your P&L, right? So you don't have a good sense of what revenue did I actually earn? What was my margin on that? What was my bottom line on that? And out of all of that, how did that translate into some sort of cash flow number in my bank account? You don't have that good view of that. And so when it comes to how do I now pull different levers to maybe improve that margin, you really don't have that foundational data, to be able to see that.
Okay, so that's number 1. What would be the second biggest one?
Yeah, second biggest one, probably the looking forward. So having some sort of forward view that's informed by those historical numbers, but also combines with, your goals as the owner, what the business needs, how you're going to grow it, putting together some sort of forward-looking view. What that often ends up translating to is owners making gut-based decisions. So I have this idea of maybe hiring this employee, maybe buying this equipment. Seems like a great idea. Let's do it. Let's roll the dice. Let's see how it goes. Right?
What? None of us have ever done that.
None of us have ever done that.
What? That's not how the studio was created. What?
Yeah.
Yeah.
Exactly.
Yeah.
Right. And so you make the decision that maybe was doomed to fail from the beginning if we just put that through like some sort of financial view forward looking and had an impact. Or maybe it wasn't doomed necessarily from the beginning, but maybe there was certain risk that could have been identified earlier on that you could then have taken steps to mitigate some of those risks, And so I would say that's probably, biggest mistake number 2. Biggest mistake number 3 would probably be the illusion that you can do it all yourself. Many of the owners that come to us, like they are not only owner, but they're CFO. Or maybe even in some cases their bookkeeper, right? So probably that illusion that, hey, I know my business, I can do this myself, but it's not your expertise. It's not what you do every day, and so holding on to that piece too long tends to be a big mistake.
And are most of them just tracking it in Excel, QuickBooks? Like, I think about my business, just I always try to be transparent, like, be the use case, for this, even though maybe I'm not a perfect client for you guys, but I know it's like, all right, I know the revenue coming in.
Yep.
I know the payroll going out for the team that needs to help put all these things together in
Yep.
place, whether that be people here or offshore somewhere else.
Yeah.
And I have a basic understanding of like our software that we use.
Yeah.
Am I just like, is having that all on an Excel sheet, is it, there's got to be more to it than that though, right? Like what am I missing if I'm just looking? And I
Yeah.
don't even know, I don't even track all my softwares on a monthly
Sure.
basis. Like I
Sure.
don't have a monthly P&L report.
Yeah.
And then should that be something we're running every single month to show how profitable we are?
Yeah.
And we'll get into more of this, but I'm curious your thoughts.
Yeah. I mean, I would say most people are using QuickBooks,
Mhm.
would be kind of the standard that we see. But yes, I would say it's absolutely important. The reason would be, again, to be able to identify what levers can I pull. So what you might see if you look at that P&L is, okay, here's the revenue, here's the people I paid, here's my overhead, here's my bottom line. My margin, though, seems kind of low, right? Now, the purpose of identifying that wouldn't necessarily to be to solve every problem,
What's a
right?
good margin, by the way, in your opinion? Like what's a good margin for a business to have? Let's say they're
Yeah.
B2B.
B2B, like professional service-based
Mhm.
business, right? You're probably looking at 60% or above.
Okay.
Yeah. And so maybe you're falling below that, right? What I would then do is, okay, what do I need to dig into here to identify where the gaps are, right? That probably looks like some sort of, for a professional service company, like a utilization metric. Like, are my people being utilized on billable work versus non-billable work? What is my utilization? How do I maybe improve it? Is it a performance issue? And so that's where you start like digging in multiple layers deep underneath that high level margin number to be able to identify what the real issue might be. And that's where the CFO comes in. Hey, I feel like we could be doing better on this number. What should we be looking at each week? And we do this within our own firm. We call them our time and teamwork reports, where we look each week of how billable is everybody on the team. We have conversations. We look at it by client as well.
And what do you mean? Can you explain how billable they are? And then how do you track that stuff?
Yeah. So tracking, there's so many different softwares where you can track your time in. Probably Monday.com might be very familiar for a marketing company. We use one called Teamwork. There's, probably like 100 other softwares like those, right?
Are you tracking every hour they work?
We are.
Hmm.
We are. So we track we're pretty diligent about the time tracking, and for the purpose of it helps us identify where we can be better.
How do the employees take that when they have to track every hour they're working?
It's nobody's like most fun task of the day. It's not my most fun task.
Right.
And it's less important for us to get it like exactly right all the time. It's more important, like, I want to see, hey, if you're 90% billable and consistently working overtime, I want to understand that, because our employees are salary employees. I want to understand that so that I can plan out your capacity well, and so that you're not overworked. And so that's kind of how we like sell it to them,
Yeah.
of like, hey, this is for your benefit too.
Right.
So that we understand where you are. It also allows us to identify, okay, they spent this many hours on this client. Probably should be maybe half that. Let's talk to them. Let's see how we can help them. What's going on that, we can help them move the needle for them to get a little bit better. So
that's an important thing to track, I think, especially if your services and it's one of those things where it's like, in marketing, it's like, it could be very subjective. It's like, how long did it take to edit this video or to go through this podcast and find the best clips or to create a thumbnail or whatever it might be? And we're using a lot of AI now, of course, but like, if you don't know, you could have some person that's being 50% less efficient or some person that's being 50% more efficient, you just wouldn't know unless you dug into it. That's why I ask. Cause like, I think it's one of those things where as a founder, as a leader, you don't want to feel like you're micromanaging, but at the same time, you got to know this stuff. Like if you're really going to be, legitimate business, you have to know how your people are being utilized.
Yeah, absolutely. And again, the point would not be to micromanage.
Right.
It's truly to see, where's our capacity as a firm? Where are we profitable on our clients? What clients might we not be profitable on? And this is when, we get to the conversation of like being able to have some sort of work-life balance, right? Your family deserves to know that information. You're not going to be able to have that in a professional service firm
Right.
if you're not tracking that and understanding, hey, this client is actually unprofitable. So either we have to figure out a way to get efficient on it, and maybe that's integrating, bringing AI in at some point, or maybe that's we're just doing it wrong, something. We either have to get more efficient, or maybe there's a price change that has to happen. Right. And all of this will then float up to you should see the impact on your margin
Right.
month over month.
And how does your team record the hours? Is it every day at the end of the day they go in and they just list what they did and how long it took, or is it per task they're going in there and updating it?
Yeah, I mean, how we do it is, so we require everybody to have at least 40 hours logged by the end of the week, or before the start of the next week. So we do it weekly. We're reviewing the time weekly, just because we're kind of been in rapid growth mode over the last year. So it's really important to keep a close eye on how is this stuff working, right? And we're looking at it every single week. It doesn't, in my opinion, doesn't necessarily have to be down to the task. But it might have to have some sort of explanation. So if I'm seeing you're spending twice as much as I would expect on a certain client, I'll probably ask, hey, are they asking for a lot of things? What's going on?
Yeah.
And so you probably have to have some sort of, knowledge around, hey, what is taking me a long time, to get there.
So I'm a founder right now, and I'm
Yeah.
not tracking my people, how they're spending their time. They're just
Yeah.
on salary. I trust they're getting the job done, but I hire you or bring someone like you in, and then we start uncovering some of these gaps. What's the first step to creating a system like that? Like, where do you start? If you're not tracking anything your employees are doing, other than like, you know what they're doing, but you're not down to the utilization and efficiency and task and time they're spending on stuff. Where do you start?
Yeah, I mean, you probably have to have some sort of software in place, whether that's like a Monday, a teamwork.
Airtable, I imagine.
I imagine Airtable. I mean, you can do anything in Airtable. Something like that in place to where they can efficiently do that. I would highly recommend by client, at least tracking it by client, and then maybe having like a non-billable client, a firm client. And I would just begin and just see where it is. Watch it for the first 3 months and just get a few months of data before you make any drastic conversations on clients or anything like that.
We're changing everything.
Yeah. Because what will happen often is, there's a reality of, okay, maybe an account has to switch team members. Well, that new team member is going to spend a lot of time that first month for training. And so it's just a practice of like, can I explain what's happened here?
Now, what about the founder? What about the team looks at the founder or the CEO or whoever it is, the leader, and goes, where's your time tracking?
Oh, we track our time too.
Good.
Yeah.
Okay, good.
Yeah, absolutely.
Good.
I
think it has to be that way.
It has to be that way.
Yeah.
Especially if you're working on clients. If you were like full-time business development or something like that, maybe it's not as necessary. But even on that, I track my time on business development.
I think it still is, because otherwise, and it also keeps you more focused and disciplined. Because if like, I got to track my day, I can't just be like, oh, this, that, emails, I'll check LinkedIn, I'll go to a client stuff, I'll bounce into here. Sometimes it's like the focus of just, where am I spending my time today? Yeah. And if you're tracking it, you're going to be more intentional.
Absolutely. And I'll actually track it down to like the main business development task I need to do. Because I'm always, business development is a huge time suck.
Yeah,
right?
For sure.
And so I'm always curious, how do I get more efficient on my business development? And so I track my time down to, how long does it take me on average to go like get a coffee with somebody to go, this sounds super dorky and in the weeds, but that's how I do it. And so what I do then is I know, okay, based off my basic targets I want to hit for business development, it's going to take me this many hours a month. And therefore, I can only, with integrity, say yes to this many billable hours each month. And so for me right now, that split is 60% business development, 40% client work. If I take more client work, I know I'm going to have to sacrifice on the business development side in order to keep integrity and in order to show up at home at the end of the day when I want to show up at home. And so that's why it's so important to me is I just don't know you just can't plan it without that level of data in a professional service firm.
So you mentioned your company's growing rapidly.
Yeah.
When I hear that as a founder listening, I'm like, tell me more. Like, what are you guys doing to grow your company so fast? I mean, what's happening? And from a business development standpoint, like what's marketing, what's working for you guys right now? And then we'll get back to the finance stuff.
Yeah. So this probably started last year. Last year, we nearly doubled as a firm. It was our biggest growth year ever.
Yeah.
I mean, practically, the things that we did was first, we worked with the sales coach.
Yep.
This was hugely impactful for us. I mean, we're all finance people, accountants, we're not like trained salespeople.
Yeah.
And so this was, I'll shout out Dr. Jean, the results queen.
Yeah.
Nice. She is the results queen for
Nice.
sure. She gave us
Is she local or no?
No,
Okay.
I believe she's down in Texas.
Okay.
Texas, yeah.
Got it.
Yeah, but she is the results queen for sure. And she gave us just clear pattern to follow through a sales process. Here's what to talk about in the sales call so that you just don't get lost in the weeds.
Or you end up talking too much
Or
and
you
then
talk too much.
you just oversell it.
Yep.
And when really you should be listening and asking questions more. Yeah.
Exactly. And so that was hugely helpful for us to increase our close rate on the people we were getting in front of. She was also big on getting out of she called it caveman brain, get out of your boundaries that you think are possible and think a little bit bigger.
Like
what team members would have to be in place to bring in this person or bring in this client, so thinking through those few things was hugely impactful for us. Yeah. And so having her was helpful. The other thing that we started doing was just in person as much as possible. Going to coffee with people, calling people that we were networking with. So not really cold calling, but hey, we met a month ago. How you doing? How's business going? Who do you know I should be talking to? And just consistently doing those small tasks. And so
in the world of AI and automation and everyone's trying to, lead gen their way out of every freaking sales conversation, it's refreshing to hear that. And we obviously do that too. And that's why we do the podcast in person now. It's like, it just makes a big difference. And I think there's no replacement for having real conversations, building real relationships.
Yeah.
And the people that are just trying to automate every freaking thing. And there's certainly AI and automation in play here, but you can't automate every conversation and relationship. You actually got to get out there. And it's nice when you talk to a human being and they're willing to have a conversation with you.
Yeah, absolutely. Yeah. I mean, pretty much what I try to hit right now is call 3 to 6 people a day on average. And again, these are people that I know. These aren't.
That's a phone call.
That's a phone call. So, call in the banker that I met at the networking thing last month. Hey, how's it going? How's business going? Who do you know that I should be talking to? Anybody impactful, that would be a good relationship, those type of things.
I don't think people pick up the phone enough. I think a lot of people would hear that and go, calling somebody. What?
Yeah. Well, you'd be surprised. It doesn't take that long.
No, it doesn't. It's better. It's more efficient, honestly.
It's more efficient.
If they pick up, you're in a conversation right away versus trying to schedule something.
Yep. It's more efficient.
I just think we've gotten away from a lot of that.
We have.
Where people are kind of scared to pick up the phone and just call a damn person.
I think that's how you can be different. That's how you can be different. And so I do that. And I know my partners are doing that as well. I try to go to 3 coffee dates with people every week. And then try to go to one sort of event style thing. So this might be a referral group. It might be an actual like event conference. It might be something like that. But those are the things that I'm trying to hit every week in order to keep the pipeline up and be making connections and then try to be a giver and connect other people as much as possible.
Right.
Hey, I think you should know him. I think you should know her.
Sure.
Those type of things.
Yeah, that's awesome, man. And then going back to the finance stuff, what are some of the aha moments that happen when you start digging in with the founder, CEO, company? Yeah. What are some of the like, whoa, we thought we were doing this, but really it was that? Like, walk me through some of these things because maybe there's somebody listening that's thinking, I don't know if I need this help or not. Maybe we're fine.
I'll give you a few examples. Yeah. So one company we work with, staffing firm, they're doing maybe
local?
Nope, not local. Yeah, a lot of our clients are coast to coast, so we can work all over.
Makes sense.
But staffing firm.
How do you get, really quickly, how do you get those clients then if it's not because you're not meeting them at the events, you're not doing the in-person coffees.
Yep.
How do those companies come in?
This one was just it was funny. We had a current client that had a business coach that does kind of like group coaching type style coaching. And that business coach liked our work so much on that current client that he said, "Hey, you got to meet this
Referral.
person."
Got it. Okay.
Yeah.
Cool. Okay. Anyways,
so,
I didn't mean to cut you off.
Yep. No. So, aha moment. I mean, this was just in the last week we were talking about this. The issue that she's facing right now, she has more work coming in than staff to fulfill the work. So, staffing company, she's placing nurses in assisted living facilities and so much opportunity and all that.
Good problem to have.
Yep. And so we're thinking through, how do we solve this? Because if we want to hit the budget to accomplish your personal goals, we need some more billable hours on the revenue side. And so, it's we crunched some numbers and figured out, okay, you have three options. Your cheapest option margin wise is to have a full-time employee in the state that you're in. Your second cheapest option is to have a contractor that's a little more expensive because you're not paying their benefits and things like that. So they're going to demand a little bit more. But it still earns you this margin, which gets us here. Third option would be we actually fly somebody into the state, get them licensed in your state, put them up at a hotel or Airbnb for multiple months, and it earns you this margin. And so the aha moment is you actually have all these options to find these people. This for her will end up adding maybe 50,000 in revenue each month if we're able to execute on it. And that's, going to result in maybe 10,000 of margin each month. And so I would say that would be an aha moment of understanding, like, what are my options available? I'll give you another example.
Yeah.
We had a restaurant, Mexican restaurant. Their menu is margaritas and a bunch of tacos. And this place does awesome. They do a ton of business. And noticing, hey, that your margin is decreasing a little bit, right? And so, aha moment, something's going on underneath. So we talked about for the professional service firm, that would be, let's look at the hours and see what's going on. For them, it's, hey, let's look at the recipes and see what's going on. So we have systems set up to where we can see the cost data behind each recipe, each plate that they have, each drink that they have, and what's happening on them. Are servers overpouring the tequila? Is there theft happening? Let's dig in and understand what's happening. Well, ultimately, it's the cost of limes went up is what happened. As you can imagine, it's all margaritas and tacos. That's on everything that they do. And so, hey, let's adjust some of the input costs of the other ingredients. Maybe we get a little cheaper product on some of the other things. Maybe we raise the price slightly. And, that's us talking with them of what will your customers notice, what will they not,
what matters and what doesn't.
Yeah. And then that ended up being a 10,000 plus impact on their margin each month.
Wow.
And so I would say a lot of aha moments around margin, right? This maybe isn't as high as it needs to be to get to your goal.
Yeah.
And so how can we dig in and solve that?
I like your guys' approach because I think you hear anything accounting and you think numbers, spreadsheets. In reality, the numbers are just kind of giving us part of the story.
Right.
And then you dive in and then you assess and then you have options and opportunities and, there's things that you can do within that. The numbers are just kind of let's just see what it looks like.
Right.
And then that tells us where to maybe dive in and do some more work.
Yes,
right?
Absolutely.
So walk me through the difference of like having a CPA.
Yeah.
Or does CPA versus accountant? What's the difference there? And then some people just have like a tax guy. It's like, I have a tax guy once a year that does my taxes. Isn't that all I need?
Yeah. Good question. Potentially it depends the size of your company, I would say. Solo entrepreneur. Yeah, that might be where to start is have the good tax person. That's going to set you up for success structurally and with your books and all of that. And so, a couple different terms out there out and help define. So there's the CPA, who is, usually when people say CPA, this is a tax focused person or a compliance focused person, I'll say. Super important to have that person. Super important to have good planning.
Do you guys do that stuff too?
We do not. Nope.
Got it.
I personally am a CPA. My partner Kyle is personally a CPA, but our firm is not a CPA firm where we do compliance work. And so, but super important to have that person because you'll need to plan your tax payments for your cash flow. right? And so you'll need visibility into what that's going to be. You obviously need to be compliant
Hmm.
and stay on top of that. Then there's kind of the bookkeeper, right? So if you've ever read the E-Myth, this is the first thing that they say you should offload, right?
Mm.
This person is going to keep the books. So they're going to go into QuickBooks for you. They're going to categorize all the transactions. Ideally, they would even be able to close the books again on like an accrual basis to where you can see here's what I earned, here's what I actually incurred in expenses in a given month,
Mm.
and produce a financial. You have a couple other terms in there like accountant, controller maybe. I would say those are in a typical company, those are just representative of maybe a higher level accounting professional,
Mm.
where as your business grows, maybe you need a controller. If you're a $10 million company, you might need a controller with a couple bookkeepers underneath, and that person's really coordinating everything to make sure it's running smoothly. And then you have your CFO, and that person is forward looking
Yeah.
and strategic. That's really what they
If
should
they're
be
a good
focused
one,
on.
right? Yeah.
Yep.
So, what is the human psychology behind why business owners don't want to dive into the finances? 'Cause I imagine it's
Yeah.
like sometimes it's like,
Sure.
oh, it's like nervous just thinking about diving into all this stuff. Do
Yeah.
you find that like when you have conversations with people, there's a little bit of resistance, and I feel that whether it's
Yeah.
getting on video or doing podcasts, whatever, there's a certain resistance level there.
Right.
And I usually can uncover what that is from a psychological standpoint.
Yeah.
Do you see that with business owners? Or are they pretty much like, hey, open book, come on in and let's do it?
That's a good question. I think there's some. Yeah, there's certainly some who are nervous about what the picture might look like.
Hmm.
Right. I would say more often than not, the folks we're talking to are pretty open though.
Hmm.
Pretty, I mean, we're working with people who want to grow their business.
Yeah,
And
they're serious
so,
about it.
yeah,
Yeah.
they recognize at some level, I need to know this information.
Yeah.
They maybe not recognize like how important it is,
Yeah.
and they're pretty open with, uh, hey, this might be a mess, but I need some help,
Yeah, totally. Well, you got everything that you want is on the other side of your comfort zone,
Right.
And the same thing I tell people
Exactly.
with content is like, hey, you don't have to get on video and build a brand and attract customers, but
Exactly.
you're missing out on a lot of things if you don't.
Yeah.
So I saw one of your client testimonials. It said, Hunter and the team at Strata Cloud did an amazing job saving me 6 figures in taxes within the first month of engagement. I
Yeah.
know you're not tax specialists, but I'm curious about that.
Yeah.
Like
That was,
just in general, what should business owners be doing to save money on taxes?
yeah, that was a very unique situation. It was actually on day one of the engagement.
Whoa.
One thing, I'll often ask for is, hey, could you just give me your tax return? Let
Okay.
me just see what it looks like. Let me, and what I want to make sure of is that you're working with somebody who's good, who's going to give you the visibility in what's coming down the line so that I also have the visibility in what's coming down the line, specifically for your cash flow.
Right.
Because when that tax payment comes out, we're going to need to take that into account because you're probably going to have to use the business to pay for that. And I always tell people your best KPI is how much you pay in taxes. More you pay in taxes, you're probably doing pretty good. And so a little bit of a mindset shift there.
What if but that being said though, doesn't Elon Musk pay like no taxes?
I have no idea. Yeah.
I think personal income, isn't there opportunities to strategically not pay as many taxes legally? Like,
Absolutely.
yeah.
And yeah.
I
No,
know what you mean,
the
though.
point is not you should never pay taxes or
Right.
you should, not take advantage of what's there.
Right.
The point is I do encounter some owners who are resistant to growth because it's like, oh, I don't want to pay more taxes. And it's like,
Oh.
well,
You
hey,
make more money.
you
It's
make
like, I
more
don't get
money.
that. Yeah.
So with that particular instance, though, what was going on was he had hired another accountant before to try to clean up the books, catch up on some back tax paperwork that he needed to do. And I was able to just recognize, hey, this person isn't giving you good advice. They were just requiring that he does a different structure than was optimal, and
Okay.
and so I was able to get a buddy of mine who specializes in that area. I was like, hey, could you just come give us a second opinion? And it ended up resulting in a pretty large tax difference for him. down
Mm,
the line. So a little bit of a fluke thing, but yeah, we're, as the CFO, we're always looking for, hey, I need to understand how your cash is going to be impacted. Taxes are going to be a part of that. And so I
mhm,
have to understand the picture a little bit.
right. Do most business owners know how much it costs to acquire a client?
No.
I was gonna say, I think
Yeah.
like that's like they maybe have a rough estimate, but I just don't think a lot of business owners, if you pin it down to say how
Yeah.
much, they're like, this is my CAC, right?
Yep.
Or cost to acquire a client.
Yeah.
And why is that? And how do you start defining how much it costs? Because I don't even know. I mean, I could look at like, okay, revenue, what it costs to produce the services that we have, and I could give you a pretty good range,
Yeah.
but I don't have it
Yeah.
down to like, oh, it's $3,000 to acquire one customer. And our lifetime value, I think is a little bit easier because you just look at like, what is your monthly premium or what is your charge to offer, whatever you offer,
Yeah.
and then times that by what the engagement typically is. If you typically have clients stick around for 3 years, and it's times it by 3 years.
Right.
But the CAC is a little trickier.
It is trickier. And I'll be transparent. I don't even know for our firm the exact number.
Okay, well, there you go. It's just that tricky, right? Do you need to know the exact number or no?
I think it depends where you are in your business life. For a young company who
Mm-hmm.
I don't know if it's the most important thing for you to know
Okay.
right out of the gate. And I think it also depends by industry. So I'll speak to professional service, right? In my opinion, for our firm, we are doing a little over $1 million in revenue. And so for our firm, I don't know that it's the most important thing for us to focus on right now. Y- we know that how much we're investing in marketing and the things that we're
Mm-hmm.
doing, we can be
Right.
profitable
Sure.
month over month with where we're at. And as we mature as a company, it's certainly going to be something that we'll learn eventually and be able to diagnose. Now, for some of my clients who are a little bit larger,
Mm-hmm.
one specifically, we are just starting the practice of how can we maybe calculate this over where were we at in 2025? Where were we at in Q1? And so that was actually a to do that just came out of the last meeting to
Mm.
start really digging into that because where they are in their life is in the next few years, they're going to sell their company.
Mm.
And so it's becoming more important to understand and make it predictable
Right.
around what is the cost of acquiring it so that we can articulate it to a potential buyer.
Yeah.
But also so that we can start making our revenue a little bit more predictable and know where we should be investing so that we know how to bring clients on.
Mhm.
Right now, they don't have it systemized to that level. And a potential buyer is going to want to see something like that.
Well, that's what I was going to say is like a lot of the work that you're doing is setting companies up for if they do
Yeah.
want to be acquired or sell their business one day or have it ran by somebody else, whatever that situation looks like,
Yeah.
the first thing they're going to look at is the numbers.
Yep.
Is show me the numbers. And if
Exactly.
your shit's a mess or it's all over the place or you don't know the key metrics,
Yeah.
it's you're going to have some work to do or potentially you might lose out on the buyer.
Yeah. I mean, don't quote me on this, but I heard this in a training the other day. Not having your numbers together could impact your multiple up to 1 point, and which could be pretty significant. I mean,
Right.
for some companies that could be $1 million,
Mm-hmm.
worth
Right.
of sales price that you don't get just because you didn't have your finance house in order. And so it is very, very important, especially if that's in your future, long term or short term.
Yeah. And I think in short term, it's just like even if you're not going to sell your business, just it's going to help you operate more efficiently and be able to think more strategically for your
Yeah.
next moves or hires. Like there's only good stuff that
Yeah.
can come from it.
I'll give one caveat on what I said on the cost of acquisition. Probably more important for a product-based business,
Mhm.
to know that.
Right, for sure.
They're investing heavily
For
in
sure.
paid ads and those,
Yes.
those type of marketing avenues. And so that's why I say it depends a little bit on industry, but for a company like mine, professional service, on a consistent growth path, we're not trying to go like that necessarily. I think it's a little bit less on the priority in
Yeah.
terms of KPIs to track from day one.
Well, I think product-based businesses are a little bit more simple in terms of you typically are paying for the cost of goods,
Yep.
and then for those goods to be assembled or created into the finished product. And it's kind of like gross margin versus net margin. It's like
Yep.
you kind of have to
Yeah.
calculate those and know what those are, and then the
Yeah.
marketing that it takes to get those products in the hands of customers.
Yep.
Where professional services, there's similarities, but it's definitely much different. There's a little
Yeah.
more gray area and things like
Yeah.
that. It's usually a higher ticket and that kind of
Yeah.
stuff too. What would be the most important numbers that business owners need to know about their business? If you're sitting in a room and a
Yeah.
new business owner comes in here, you can ask them 3 questions. What do they need to know?
Super basic revenue,
Yeah.
margin. And so when I say margin, I mean your gross profit margin. So that's like the revenue minus the direct expenses. So in professional service, it's going to include the personnel that's working on your clients, right? So revenue and margin, net margin, and then net cash flow. Uh, that would be um, the base level things that I would be paying attention to,
Mm-hmm.
as a new company.
Mm. And so if gross includes the people, the payroll, that type of stuff, what is that not included in the net then?
Marketing,
Okay.
accounting,
All the other business expenses.
all the other
right.
business expenses, office rent, all of those things.
Got it. And that's your net margin. That's obviously your take home pay and what you have to distribute, that kind of stuff.
Yep.
Yeah.
And I would even include in there, because again, what I always encourage people to look at, whether you're going to sell your company or not, is how would somebody look at this company?
Mm-hmm.
When I would look at my P&L like that, right, I would include a fair salary for myself in there as the owner,
Right.
right? You want to look at, I'll get kind of nerdy on you again, like a normalized EBITDA. So what I mean by that is EBITDA is earnings before interest, depreciation, taxes, right? And so it's basically your net profit at some level. You want to normalize it. So what I mean by that is, there's tax loopholes that you could maybe run through your business, right, in terms of expenses. Well, that might not matter to somebody who's going to purchase your company, because that might be a private equity person. That might
Right.
be, it's in the eyes of the beholder a little bit. You want to make sure that your salary is a fair salary, right? Because they're going to look at it from who am I going to hire to run
Mm-hmm.
this, right? And so you really want to know not only your net profit, but you want to know like what is like the true profit of this. If everything was fair here, I was paying myself a fair amount, meaning not too high, not too low, but a fair market amount. If I, took out the fact that, I paid out this, tax loophole through the business or something, what is my true profit of the business? And I think that's really important to see because you see, again, your business model. You could on a month-to-month thing we do for some of our clients, especially who are looking to sell in the next few years, is roll that up to a potential valuation number. So, hey, 4 years from now, if based off this normalized EBITDA, if you grow your company at this rate, here's what you might be valued at 4 years from now. Range of multiples depending on averages. And so it gives you that insight a little bit into what is the value in the asset that I'm creating.
Mm-hmm. And what about for your company? If you look 5 years, and I know it's hard to kind of picture, but what is the goal for your guys' company? Is it to sell it one day? Is it to grow it and continue to run it? And who knows what's going to happen? Do you just love
Yeah.
doing it? Like what's kind of the vision for your business?
Yeah, good question. We are building it as if we are going to sell it one day. That is the view. I don't think that is any time in the near future
Mm-hmm.
is kind of what we're thinking. I mean, like you said at the beginning, 5 young kids, soon to be. My partner is in a similar boat. Our other partner will probably retire in the next 5 years, and so that will be in the near term future for us. And so, but I think our vision right now is, hey, we want to build it. It's a lifestyle company. We want to build it to continue to grow it, but we want to grow it in a way that still allows us to be present with our families, to do a really good job for clients. We have the personal touch. I'm sure that will always be a part of it. And we want to grow it in a way, though, that it is a valuable asset if the right offer came along.
And that's sort of what we talk about in the show a lot, which is, you're building a lifestyle business, but you're also building a sellable asset. A
Yes.
business that can potentially run without you, that could potentially be sold.
Yeah.
What is your number one thing that you do to have a lifestyle business, but also a business that grows, grows in revenue, but also grows, in the next several years into a company that could be sold? Like,
Yeah.
what's one, if you could give one takeaway to a founder listening, that's maybe they're growing a business, but they're drowning and they never see their family, or they're like working until 10 o'clock at night or 11 o'clock at night every night, or the opposite, someone that's struggling in business, but doing amazing at home. Like,
Yeah.
what's your secret to balance those two?
It's a good question. Boiling it down to one. I can tell you what it's been for me.
Yeah.
You have to not be scared of the loss of money. This is something I've had to learn. Anytime you bring on an employee and you hand that client to that employee, you're taking on a risk, right? There's a potential they could do a bad job and you lose that client and it affects how much you make, right? And you just can't be scared of that.
Hmm.
I've had to learn that along the way.
Mhm.
If I'm going to be able to go to my kids' soccer practice,
Which is later today, right?
which is later today. Yeah, I coach both teams.
Nice.
So I have to be there.
Yeah, yeah, you kind of do. Yeah.
If I'm going to be able to do that, I can't be the one to do
Yeah.
all the work. And yes, that maybe means that affects how much I take home in the near term, right? As we continue to grow. But I have to stay true to that. And so that's been it for me. I think the principle there is you just can't be involved in every part of the business. You got to trust people. You got to let other people run it. You got to get team members involved who are capable and knowledgeable. And that involves some risk. And for me, I was a little scared of that risk because of the potential financial impacts. You got to identify what you're scared of in that and don't make any decision based off fear and do it. Give it a try.
I love that advice.
And then fail and then learn how to do it better.
Yeah, that's right. And it also puts your focus on making sure you're good at developing your people and your team.
Yes.
I've really learned that the last year is that when you do bring on people, you got to make sure that the onboarding's good, the training's good,
Yes.
the coaching's good, because there's times when you just kind of rush things.
Yep.
And then
You
if
can't.
that's not good, the people aren't going to be able to take care of the clients. They don't know what to do. They didn't have the proper training or cultures or, like
Yeah.
the core values, instilling that in the company and making sure that it really is a place that everyone is excited to work and does
Yeah.
awesome work. And
Yeah.
the other thing I'd add on this is that for me, just making sure that you're making every second count.
Yeah.
Are you disciplined and focused on doing the right things during that time period so that when
Yes.
you do check out, and I talked about this with a guy named Eric who was on the show, he goes, when you're giving away your time during the day on stuff that, and it's not like we're sitting around like watching random cat videos or something, but just, as a business owner, you got a lot of different things that pop up. You got emails, you got someone pings you on LinkedIn, you got a team request, and you have to figure out what is critical, what is A time stuff, and then what is B time stuff. But if you give that time away during the day, you're now sacrificing it with your family.
Yep.
So you're just kind of like taking away from them later on because now you're still busy and have to catch up on stuff.
Absolutely.
So focus.
I mean, I always think about it like this, like is what I'm working on. If I had to explain to my family, which I do, because my kids are going to ask what I did today.
Yeah, right.
If I had to explain to, my wife who's at home working hard, raising our 4 kids right now, and about to have our 5th, if I'm explaining what I'm doing today to her, am I able to articulate how it's impacting the growth of our business? And if I'm not, then it's probably something I should be delegating to somebody. And if that person doesn't exist, well, then I need to go find that person. And I need to know my numbers to know if I can afford that person. If I can't afford that person, I probably need to go back to the data. Well, why can't I afford this person that I need to delegate? Is it a revenue problem? If it's a revenue problem, is it because there's a mispricing of customers? Or is it because there needs to be more customers? That's like the thought process of the CFO of I want this. I want to be home at 5. All right. Today it's 3 because of soccer practice. Well, I can't do that. Why can't I do that? Well, because there's not this person. Well, I can't afford that person. So where does that trail lead? And you got to have the data to follow that trail.
AI is obviously the big talk right now. Everyone's talking about it. I think it's almost overhyped. As powerful as it is, I think sometimes it's a little just too much. It's
Yep.
like,
Yeah,
the core
sure.
fundamentals, there's a lot of things that still are the same, right?
Yeah.
But when someone says, can't AI just do my accounting for me?
Yeah.
What's your reaction there? And how do you feel about AI kind of coming in and,
Yeah.
what's its place in your world?
Yeah. Maybe one day it will.
Yeah.
Very possible. I think the general opinion that I hear from other CFOs, accountants is that, um, like everything that you hear online, right? The lower level tasks, of course, those are going to be more and more automatable. We're seeing GPTs and things like that making an attempt at bookkeeping. Now, what you have to do is you have to be there to instruct it, just like you would an employee.
Right.
You have to. It asks you questions. Hey, what is this transaction? Those type of things. And I'm sure it will get better and better, right? But I think it's always going to be important to have the professional involved, right? Who understands what's going on, who can work with AI to be able to implement those things. Um, it's hard for me to imagine a world where it fully takes over everything.
I mean,
Uh,
I think it's like Terminator situation if that
yeah,
happens. It's like we're all screwed if that happens,
yeah. It's like
honestly.
I don't really understand what our world necessarily would
Yeah,
even
what would
look
we be
like.
even doing? Just I guess we all just get a universal income and then AI
Yeah,
does everything. That doesn't seem like a world I'd want to live in even.
yeah. I'll also say from business to business, accounting is very nuanced. You know, the way the construction company does their accounting is very different from the way that
For
the
sure.
marketing company. The way one construction owner likes to see the P&L outlaid is very different from the way number two likes to see the
Hmm.
P&L. And so there's also just a ton of nuance to it. Um, that I think would make it difficult, but it's certainly going to play a bigger role. I can tell you that's things we're doing are incredible
Hmm.
that like 5 years ago were like you would have had to have an entire engineering team
Yeah,
to
no
do.
kidding, dude.
So it's certainly playing a huge impact,
Hmm.
and we're learning more and more, how to use it in a way that's effective.
Love it, man. Hunter, I appreciate you coming on the show, man. This is a great conversation. Where can people find you, connect with you, learn more about what you guys do?
Yeah, LinkedIn. So you can find me on LinkedIn, Hunter Scott. The name of our firm, Strata Cloud Accountants. You can also email me directly, hunter@stratacloudaccountants.com.
Cool. Appreciate you again for being on the show. Thank
Yeah.
you guys for listening and watching, and we'll see you on the next one.